Consistently winning is a science in Betfair trading or any other type of trading. It's why some people like Warren Buffett manage to formulate a strategy that works over and over again. Without a structured plan, you'll lose money through irrational behaviour and excessive risk taking. You won't find ways to win consistently either. Which is why this week's upload is zeroed in on 3 tips to reduce trading risks, Warren Buffett style. I've read and watched a huge amount from him over the years, and it's been a big influence on my own success in trading. So I've narrowed it down to 3 main pointers here. So the first tip starts straight from the bottom, and I want to talk about assessment of the situation and perhaps the perspective on trading and risk management. Now I know risk management doesn't seem all that sexy, so I'll keep it as short as possible, but you've got to ask yourself first of all, where is the lowest risk here? And it's all quite logical and obvious when you think about it and you work backwards from the correct questions. So the least risk is in a position of, you've got the most certainty in the marketplace on your side, which means that you are the most informed and you have the most relevant information to that point in time on the item that you're trading. You don't have to predict the future is what I'm trying to get across here. Now recently I've written a blog post, we'll leave a link in the description down below, about trading different segments and the mistakes that are made through the sports industry with prediction versus trading what is actually happening and assessing risk and managing risk. The point here is very simple. You need to get in relatively early and you want to trade the middle 2/3 of any particular movement because they are where the least risk is. It's just common sense. Now by spotting something that is under or overvalued at that point in time in the marketplace, confirming the motion as it's already starting even. You don't have to be first and then getting in before the masses and the crowd or before the move is fully developed and then getting off before the end even. It doesn't matter. You're taking yourself a low risk segment of value based on real-time activity of something that is actually happening in the marketplace. And this is why Warren Buffett spends 5 to 6 hours a day reading. He wants to be most informed on relevant information so he can make the best possible decisions as they're happening, rather than trying to have some kind of crazy foresight predicting into the future. Now, if we relate this to a sports trading example on the Betfair markets in horse racing, and in fact, the third tip overlaps with this, so I'll come to this in just a second, but you're only looking to take that larger period of movement that is really quite predictable because it's happening and there's a good amount of sentiment behind it. Essentially, you don't need to be first in, you don't need to be last out, you just need to grab the low risk value segment of a movement in the middle there. Now the second point I want to hit here is a massive advantage, but people don't often see it like that because it's not easy to visualize as such. It's not a tangible thing that we can see. It's not a chart. It's not easily measured. But Warren Buffett imposed this idea on me when he spoke about a book that he read from a guy called Ted Williams to do with efficiency in baseball, where he turned around and said waiting for the fat pitch would mean a trip to the Hall of Fame, whereas swinging indiscriminately would mean a ticket to the minors. Now what he's getting at here is trading is like a game where you can stand on the sidelines quite easily and you choose when you get involved. And it sounds really obvious and logical, and it is, but people don't do it, okay? And again, coming on to the third tip in a second, you'll find an easier structural way of actually doing this, but think of it like this. It's a boxing match, okay? Except you can only step in, you have the option to stand on the sidelines and step into the ring when your opponent is a little bit dopey, wobbling around, they're on the back foot, they're not feeling great, and then you can land the killer blow. But what you should do is aim to focus on those hits, if you like, only. Don't bother with the rest of it. Don't bother with the part where there's even competition. You've got to step into the ring and have a fight back and forth. Only a fool would do that. You want to take the best opportunity for yourself when you can, because you have the ability to only partake in the fight, if you like, or the trade when the odds are on your side. Don't have to play all of them. I've been saying it for years. It's not just about what you do when you are trading, it's about what you don't do. So the moves that you don't take, which enhances that bottom line. So it's a human impulse to get suckered in, but you're less inclined to want to do that when you understand the third tip, which is relevant to boundaries and time frames that you are actually trading. Now, if you're getting value from this video, please just remember 2 seconds just to tap the like button down below. It returns a favour to me and encourages me to carry on creating quality content like this. So the third point is time frames that you're trading, the boundaries, and how that has a direct impact on your own discipline and irrational behaviour. And quite frankly, it makes things a lot easier when you can identify this situation, because you know more about the situation when you know more about when it's likely to happen. Your impulses become less and your effectiveness becomes greater. If you don't know the optimum times to trade, then you don't know the most efficient places within the marketplace, and quite frankly, if you haven't got a direction, you don't know where you're going, how do you expect to get there? It's a little bit like another quote that Warren has put out there in the past, which is risk comes from not knowing what you're doing. So the advantage is twofold here. You can make more money by understanding the correct time frames, and you can lose less. Okay, it's that simple, and it really is that powerful too. So we'll put an example on the screen for you, but if we're thinking about horse racing, as I mentioned in the recent blog, there are different segments of time that the market develops, and you can see that clearly on the charting. So early on, you want to be weighing up your opinion on what's actually happening in the marketplace, seeing where the money is going, the traded volumes, because at the end of the day, money speaks. Money is the most important thing in any trading market, because it's what actually pushes the price movement. It's where people are willing to put their hard-earned cash down and back what they're saying, rather than just sort of yabbering on like you see on various channels and stuff like that. But you want to identify the areas of where you want to get involved. So where are those areas of being most informed, that the market is most active, and the move is starting to develop? It's really quite clear when you work backwards and logically like this. So in the morning, you've got the live shows in horse racing. Once the live shows start to develop around about 9:30, 10 o'clock, 10:30, up to about 11, that is the earlier point where you want to be thinking about getting into the trade if you're trading throughout the course of a day on a longer term move. Now, there's a nice big 2/3 chunk in the middle there where we can ride the wave once we've identified it, depending on different indicators, more shared in that blog. And then at the end, we've got another segment, which is a smaller segment of time, but a very high segment of turned over money, which is the live shows. Usually last 10 minutes up to sort of like the last 30 minutes before the start of a race, because these things aren't fixed. People aren't restricted by various rules when they can actually place their bets. It can happen in a little bit of a moving window. But the point is, the middle 2/3 there, aside from the live shows and aside from the very early markets, aside from before the first shows in the morning, is a nice window where the markets become a little bit more predictable. Granted, when it comes to Betfair Trading, they might be a little bit illiquid there, so you need to be careful with your staking. But the point is, you don't need to take the risk. You don't need to predict the future. And although these aren't direct, tangible things that I'm giving you here, they are a very clear, firm way of having a perspective on the marketplace and how you should be approaching risk and trying to make profit from the markets, with a strong logical reason as to why. Now, there's more on an example like this, I'll leave in the end screen here, where I showed a strategy that is directly helpful and shows you exactly how you can value something here and now, which is at a different price to what it should be, thus meaning you come out on top each and every time. So check that out in the end screen there. Thanks for watching. Please don't forget to like this video.